off your screen, focus on the next trade only. Specific things that I hear from these legendary traders, those things are just reinforced in my mind because I've heard them so many times that it feels like it's part of my trading journey now.
Is that what you've done as
Right.
well? Like with the Apex stuff, with futures, obviously. Well, you've been trading on TradingView for a long time.
Hmm.
Actually, even when the CFD, you were
Yeah.
the original hack for how to
Yeah.
do it.
Yeah.
Is that what you've been doing though? Is like you just have the ticks or pips on rather than the
Yeah.
monetary amount?
Yeah. Hmm. And, you know, I still look at the P&L sometimes, but it's not my focus. My focus is on the chart really itself and the ticks and the pips. I would even say the ticks and the pips is when you're looking at the ticks and the pips, that can be detrimental as well.
Mm.
Like imagine if you just removed all the brackets,
Yeah.
you didn't see anything. Now you're really just focused on the market.
What are your thoughts in terms of, as you said, you've been training traders now as well for a good amount of time, seeing results there. You've obviously been in the space a long time as well. Is there anything that stands out to you on two sides? One, a very, very common mistake that traders are making, but two, especially since training traders and seeing results from those traders, is there a common trait or something that really, if traders could understand or overcome, they could make
Yeah.
progress?
So the one thing that really stands out to me, in my opinion, and the ones that probably aren't going to make it in this industry are the ones that just, sign up with my service and expect that they're getting a course and that they can just turn into a profitable trader. Like they go through the course material and they say, I don't have any results. They don't ask any questions. They're not on the live streams. They don't share their trade ideas. And they just expect that they're going to be a profitable trader. And they have to understand that this is a lot of work. You're paying for access to me to ask me any question you want. I'm there to help you out and support you as a mentor, but you have to be able to do the work. Like nobody else is going to sit down and do the work for you. So even I provide homework assignments. It's not even asking a whole lot. It's just backtest 25 examples of this one specific trade setup. A lot of people haven't done it. There are people that do. Maybe there's people that do it in private as well. But until you're actually putting in the work, you can't really complain and say that this isn't working for you. Because again, I'm not selling a course. I don't think you can just learn from a course. Yes, I can go take a golf course, right? Like I can go take a course online about how to swing the golf club. But I have to go put the reps in at the range. I have to go to play at the golf course itself. I have to feel what it's like to stand on uneven ground and hit the ball out of sand. Like you can watch a video on it, but it's totally different when you're in it. So that's probably the most important thing is, there's a difference between theory and practice, right? So course is theory. Mentorship is practice.
No, definitely. And would you say that that's both sides then, isn't it? Like that's the mistake that they're making, but then also the one trait or habit that these traders are getting progress is that they're doing that.
Yeah,
They're
yeah.
putting in that work.
So also the other mistake is that a lot of traders just don't have the emotional control over long periods of time. Some traders will come in, and I've taught some of my close friends, they'll have 3 weeks of green and then that one day that just blows it all up. And that's repetition though. I've been through those times many times. Linda Rash started off with a major blow up. So that was probably a major lesson that she learned right off the jump. And can you learn from those periods though? Like, are you actually learning something from that? And I think journaling and writing down your thoughts and everything about those specific experiences is extremely important because it imprints it in your mind.
What is your thought process when it comes to having this payout? Are you looking to start a personal account as well? Or are you focused? Well, I don't know if you can trade with Apex for the time being, but are you still focused on prop firms and sort of acquiring funding? That way?
So I might still be around in the prop firm space. I have to figure out like which firms I'm actually going to trade with because I know on the Forex side, a lot of the firms don't allow you to copy trade. So for me, it makes it like a management nightmare. Some of the futures firms are okay, I think. But the thing with some of the other futures firms is the capped payouts. Like, a lot of them have capped payouts now, and it takes a long time to reach that stage of uncapped. Now that I have a fair amount of capital, it just makes more sense to go into a personal account. There's tax advantages with futures, right? 60-40, short-term, long-term. So I think mostly just focusing on personal accounts, getting more into real estate. I already own one property, but trying to accumulate a couple more to try and build up some passive income, build out more of a long-term portfolio, which is one thing that I think a lot of traders probably don't have or have that mindset of, is if you're trying to like manage a whole nest egg, you shouldn't be trading with 100% of your net worth in short-term volatility, right? Like you should not be trading with, all of your liquidity in day trading.
You might start there, right?
Yeah, you might start there and build up the capital, but once you have the capital, you should branch out. You should put more money aside as like a long-term portfolio.
Yeah, it was so interesting. Our friend Trader Main, his thought process is that most people should invest. They shouldn't even trade. Like most people should actually invest, and they'll probably make more money just investing. And yet most traders don't invest at all.
Yeah,
Most traders don't invest at all, which I get. Again, like if you're at the big start of your journey, you're trying to get the capital from trading to invest.
Yeah.
That's respectable, but just don't forget that when you do actually make some money, because it's so easy, as you talked about earlier, of like if you have this record or this huge payout or this huge result, to then just try and aim and double it.
Yeah,
Triple it.
exactly. Like to me, it would be so extremely unwise for me to just put $1 million in my retail brokerage account and try and run it up. Like that's not what I'm trying to do, because I know at times I can't trust myself with the risk. So I even now I know there's a lot of big traders that don't put that much in a retail brokerage account. They'll put like 10% of their liquid capital into a brokerage account. Okay, now trade that as if you were trading your net worth. So if you're worth $1 million, maybe put 100, 200K into a brokerage account and then trade 5 to 10K risk per trade.
Yeah, because it's more than enough. I mean, you're like,
because then if you blow the account, you're not losing the rest of the nest egg.
I think people get lost. It's good to disassociate from the numbers, but it's equally important to remember just how powerful that is. To be able to risk 5K on a trade, let's say you're doing 2 to 1, you make 10K on a trade.
Yeah,
and
again, it comes back to like disassociating with money and not giving it enough respect. There's always that balance, because at times you don't want it to spiral out of control where you're risking way too much. And a couple traders I've spoken to, they just say that they leave a big stack of money on their desk just so they know what it looks like.
Funny thing you say that. I used to have £1,000 on my desk, which essentially was my 1% risk on 100K.
Exactly.
So
because when you see it in person, you're like, wow, that is a lot of money. But when it's just a number on the screen, you're not really giving it the respect that it deserves.
Exactly. If it was in the States, though, I'd have 10, 100 bills. It'll look small.
Yeah, and it's unfortunate because I've seen horror stories of people running up, and literally I was just with somebody at the cigar lounge last night that said that they knew somebody that ran up like $100 million in the crypto markets and then ended it, way down. They round tripped a lot of it. And it's just like when it's a number on the screen, it's not real. You don't feel the difference between 100K and 100 million, right? But they put it in front of you. They put that money in front of you, in your pockets. Then you see it, and now it's actually real. And I think that's probably a hard part with trading as well.
Yeah, we talked about books a few times on the podcast so far. Like, is there any particular book that you would recommend that every trader should read?
Yeah, Market Wizards, 100%. And the interesting thing about Market Wizards is that he interviews so many different people that trade so many different markets. Yeah. And almost every interview is very similar. So every interview, they talk about processes, they talk about things that help them avoid blowing up, the risk management, the mindset. And that's really the cornerstone of trading, is knowing that there is a recipe for success. It's just maybe not your recipe, like maybe somebody's trading the options market, but that person probably has a very similar process to somebody that's trading the futures market. Right, and that's, I think, the defining factor with a lot of successful traders. So yeah, that book, because it's an easy read, and I know people have short attention spans, is they can read that book because it's interview format. It's just question, answer, question, answer.
It's related to, it's directly related to what they're passionate about.
Yeah, exactly.
If they're interested in trading.
Yeah, I've read a lot of trading books, but yeah, only a couple really stand out. Linda Rash's book, Trading Sardines, is quite good as well. Yeah. And Reminiscence of a Stock Operator is probably a classic. You should read that book like once a year.
Definitely. I feel like the reading side is really getting lost in this newer generation of traders. And I understand why. It's kind of like a thing of the past to them. But Market Wizards for sure. Market Wizards.
Because people they think that like reading a book that might be old is not going to give them an edge. But it's about how you're interpreting it. Right? If you're interpreting the story of Jesse Livermore, of him focusing on, an interesting thing with his story was, he's trading in the time where there's pits, right? And he focused on one pit, so he would corner this one specific market, before he tried to go to the other market. And then over time, he built enough skill. And then again, the boom and bust cycle thing is something that everybody can learn from.
And you see that in Market Wizards as well. That's the beauty of it. Market Wizards really shows you that pretty much all traders have that boom and bust. All traders start with quite low capital for the most part. Regardless of whether traders are fundamentals or technicals, like the rest of the principles are the same, like in terms of focus on risk management and how to avoid tilt and process and routines. And that's what matters most. And as we talked about, like, yeah, even if they traded in the pits and it was before electronic trading or whenever it was, or maybe it was early electronic trading, it doesn't matter because it's not about how they traded. It's about the processes. What made them successful. Like Luis Borsellino never went to electronic trading because he knew his edge was in the pit. But yet he still understands the money flow. He still understands to focus on what's in play. And that was talking back then, you know? But yeah, it's completely applicable today. You see it every day within the markets. It's incredible, you know? And I think a lot of people need to sort of understand that, hey, you've got some real gems that are out there and very affordable, whether it's the book of Market Wizards, especially for free now when it comes to YouTube. And this podcast, for example, it's like, just take advantage. You know, take advantage, especially. And there's the one thing I would say, and I don't know if you ever made this mistake, but a lot of people do, is they assume just because someone has a certain opinion. I know that you mentioned actually, you know, that you kind of think about it in a different way. Has that always been the case? We'll come to that. But yeah, people hear an opinion. Let's say Chris Camillo, who just on last week, phenomenal trader, doesn't use price, doesn't use stop losses, doesn't believe in technical analysis. But that doesn't mean that he doesn't believe it can't work at all. It's just for him, it doesn't work. He doesn't like it. It doesn't resonate with him. And I can understand, yes, maybe certain terminology makes it harder to really understand that that's what he's getting at. But I don't think so. But there's some people who are like, oh, this guy's a scammer. This guy's lying. He's telling, you know he's a gambler. You know, this is terrible advice. And it's like, it's not advice. It's just him. That's him. You know, like what
the thing is, like, when you hear somebody doing something and they say that can't be done, I bet you there's somebody out there that's doing it. You know, that's my perspective. If somebody says, tight stop losses don't work, there's somebody out there that's doing it. It just doesn't resonate with me. All right. So there's definitely pit traders out there that are trading them 1 minute, 15-second chart, 2-minute chart, moon cycles. Like they're doing, there's someone out there that's making money with it. And that's why I'm so comfortable with seeing other people do whatever you want to do in the markets, right? Like, I'm not going to be the vigilante and say, this person is doing this wrong and this person is doing this wrong. There's so much money and opportunity in the markets that I typically look at people and say, you know, whatever they have going, it probably works. Like, unless they're, you know, shady and people have said that this person is trying to scam people. But we're talking about veteran traders here that some people are saying, you know, skeptical comments about them. Like, these people have proven track records. They've been around for years. They've been in institutions and they have strong opinions. Okay. Let them have their strong opinion. That doesn't mean you need to attack them and break them down. Right.
No, so true. And one question that was asked on I always say Twitter, but I keep forgetting it's X now.
It's always going to be Twitter.
Yeah, exactly. But one question that was asked is in terms of, it was a bit of a random one to be fair, but it's like, are you ever going to think about joining the Robbins Cup?
To me, I just don't really see the need to. Like, to me, trading is a competition with yourself. So what other purpose is there to prove to people that you can trade? Like, it doesn't do anything to my trading.
Yeah.
Like, proving to other people that I can trade does not improve my trading. I could be isolated. People wouldn't even need to know me, right? And that's how I'm going to improve, right? Just being isolated in my own thoughts, my own processes, my own decisions, right? I live and die by that. Like, my decisions is what I live and die by. Regardless of if you give me a trade signal tomorrow, I'm going to click that button knowing full well that I'm taking a risk, not you, right? Because if I take the loss, that's on me. It's not on you. Like, you gave me advice, but I'm the one that clicked the button. And I think that's so important that traders need to delineate that. There's a difference between, I guess, what other people are doing versus what you're doing. Yeah. Like, let them do what they're going to do, right? If people are scamming out there, you're probably not going to be able to stop them unless the authorities go after that guy. Yes, you can like cry as much as you want on Twitter, and it comes back to energy. How, like, where are you spending the most amount of your time? Like, there's certain YouTubers out there that all they do is, you know, expose videos, but like they're not even really profitable traders. And it's like, where are you're putting your negative, that energy into something that's so negative, that's such, in my opinion, a massive waste of time. Yes, you might be able to save certain people here and there, but if you're trying to improve your life and provide for the people around you in the trading space, the only way that you're going to do that is by doing it yourself, right? And not focusing on what everybody else is doing. And so this is a solo game.
Yeah.
You can get support from people around you, be around a good circle of traders, which has helped me tremendously. But at the end of the day, I'm still in charge of everything that I'm doing,
Yeah.
regardless of how close I have traders,
It
around me.
all comes back to you at the end of the day. If I did give you a trade signal, you would reverse it. You'd reverse it, yeah. I'm sure you've had this question before in terms of like all the ICT material you have consumed. If someone wants to start ICT, what episodes should they go for?
To be honest, I would say just month 1 and month 2 are probably the most important. Month 2 is all about risk management. Well, this is core content 2016. Because people have asked me, have you watched 2022 or 2023? But really, the biggest one that I really needed to focus on was just the risk management. To be honest, just being comfortable with the numbers, because it very clearly broke down the probabilities of, if you have 5 losing trades in a row at $100, this is what your result is. If you have X amount of trades at this is what your result is, and just getting more comfortable with knowing that I'm going to take a lot of losses, and I just have to be way more comfortable with the losses, because again, if it derails my process, now all of a sudden those numbers go out the window, right? The probabilities that I'm expecting go out the window at a specific risk to reward, at a specific dollar amount risk.
In terms of if there were 5 habits that traders need to have, what would you say they were?
I think sleep is a big one. So I'll spend a little time talking about sleep. When I first started trading, I was burning myself out because I was trying to trade London session, I was trying to trade New York session, and I found that I was so burnt out that because I wasn't sleeping, I was studying late at night, I was watching London session, that my trading performance was absolutely horrible. So get your sleep under control. Make sure that the markets aren't taking too much of your time. That's one thing. Another thing is probably meditation. Get clear with your mind. Have some clarity when you're operating in the markets. Know the decisions that you're making, because a lot of times you can go on autopilot. And I know what that feeling is like. You sit down in front of the charts, you take a loss. Now, all of a sudden, you don't even think about the process. You're looking at the markets. You want to revenge trade, overtrade, all that stuff. Get some mental clarity so you know when you're going to go on autopilot, so you can pull yourself out of that. The third thing is, I guess, just have a healthy lifestyle. Eat well, read, do productive things throughout the day. Don't just sit on the couch, eat junk food, and don't do anything. That's a stagnant lifestyle. You should always try and be productive, because I think that keeps your energy levels up and you're working towards something. What am I on? 4? I don't know if I have any more, to be honest. Routine.
I was thinking 5 seems like a lot.
Routine, daily routine. Usually when I travel and stuff,
Yeah.
it takes me a while to get back in the routine.
Yeah.
But I like being in the routine. I think it's a nice, boring, comfortable routine. I'm not living like the crazy, glamorous trader lifestyle. I don't know. Maybe there's traders out there that do it. But I think when you get too far away from your routine, that you start making mistakes in the markets. And then 5, I would say journaling. So I don't journal as much anymore, but when you're first trying to build an edge, it's probably the most important thing that you need to do. And I probably wasted too many years not journaling properly, because it's tedious. Nobody likes doing it, especially when you take losses. When you take a loss, you do not want to journal.
Yeah.
And that went on for a very long time. So at least dedicate 3, I would say 6 months to a year. Do not miss a day of journaling. And then by the end of that year, you're going to have a lot of data about yourself. At least do it for a year, and then you can kind of take your foot off the gas pedal. Because right now, I don't spend a whole lot of time trying to learn trading anymore. So my process and my routine is very thoughtless. I don't have to put a whole lot of energy into it, because I want to save my energy for what's important, which is the trade management, the risk management, and the emotional control.
In terms of that, especially the last part, the trade management, the emotional control, one thing that we haven't talked about, which I definitely wanted to, which I'm glad I just thought about again now, is you've shared publicly, especially during this Apex run, that really your strike rate was around the sort of 35% mark on average. How do you handle that? How do you handle the fact that you're losing more than you win?
Well, a lot of those losses are small losses. So I'm typically not taking a full stop loss. If it's moving in my favor, I'm